Hey guys, good evening everyone, good afternoon, good morning, whatever the time might be, we are coming across this video. This is Emisky here, and I welcome you all to the Emisky channel. And for those of us who are just joining, do well to hit the like button, hit the subscription button, and also share the videos to those that might benefit from it, right? Okay. In our previous videos, we talked about key levels, and from those videos, we talked about how to identify key levels and also how to identify high probability key levels. We also talked about key level refinement, and I received a lot of comments, a lot of results from the videos, which was really nice. It pleased me well to see that most of you all catch the video perfectly. So for those of us who are just joining, do well to watch those videos, because those videos are more like the foundations to every other video we'll be finding on the channel here. So back to what we have today. Remember, from the last video I dropped, I said we are going to be having a series on ranges, right? And for this particular ranges series, we'll be talking about structure a bit and also about ranges, right? Because for you to understand ranges, you must first of all have a proper idea about structure. So in this video, I'll be talking about introduction to structure and also introduction to ranges, right? Now, for those of us who are not on my Telegram channel, do well to join, because a video that was dropped on the channel that contains explanations or advanced explanations on structure and also liquidity. So for those of us who are not on the channel, do well to join, and also check the informations from the pinned posts on the channel. You can get across to the videos there. Now, back to what we have for today. We'll be talking about structure, and also we'll be talking about ranges. Now, for structure, we have three types of structure, or let's say we have three ways structure can appear in the market: in the bullish form, in the bearish form, and also in a ranging form, right? Now, let's dive into what we have for today. Let me start making annotations in the chat. Now, for a bullish structure, we see price making series of higher highs, higher low, higher low, higher highs, higher low, higher highs, higher low, and higher highs, right? This is just a pictorial example of how a bullish structure looks like. We see the lower highs, as the higher lows that we bring on the market, continuously takes out the higher highs that is formed in the market. So that's just the characteristics of a bullish structure. Now, let me just give a typical example of structure, a bullish structure. Now, for every higher low that is formed in a bullish structure can be what? Internal range liquidity or structural point, right? Every low formed in a bullish market condition can be termed internal range liquidity or structural point. Now, the reason why I call them internal range liquidity is that, take for example, we are in a bullish market, price needs to take out liquidity before it continues or before it gets more momentum to move up in the market, right? Now, every lower high that is formed in the market are internal range liquidity, in the sense that we can still see price do something like this: come down, take the liquidity out, react from the key level around here, and continue what? Buying to the upside. So that's just how price functions as internal range liquidity in the market, right? Price will just take that low out and continue buying. There's no change of the direction of market, right? Now, if a low is a structural point, we can see that the moment price takes a low that serves as structural point, we always see what? Reversals. Price will come back, react from a level here, and we start seeing what? Series of lower highs, lower lows, lower highs, lower lows in the market, right? Now, in this particular example, now we can see that that low that price took out was not liquidity, but what was structural point. That's at the moment price took it out, price reversed immediately from bullish market into what? Into bearish market, right? So I believe we get the gist now. So I will not be making so much explanation on structural points and also liquidity, structural liquidity in the chat. So if you go to my channel and the videos there on my channel, it should do justice and give you a proper understanding of what you are supposed to know about structure and about liquidity. Now, back to what we have for today. Also, okay, this is an illustration of the bullish market. Now back to the bearish market. Let me clear my chart and show us a brief example of what a bearish market looks like. Now in a bearish market, we can see price doing something like this. Price will create lower highs, lower low, lower highs, lower low, lower highs, lower low. Simultaneously, price will keep creating this thing, right? Now, in a bearish market condition, every lower high that's printed in the markets are also termed what? Internal range liquidity or structural point. Internal range liquidity in the sense that if price takes it out, price will continue buying, right? And also structural point in the sense that the moment price takes it out, more like a change of character, price will come back, react, not something we call OTE, right? Now OTE happens here, price returns back here, and we can start seeing what higher highs and higher lows formed in the market. Now you can see that this was a bearish market. The moment price took out the structural point, we now have what? A bullish market, right? So that's just a practical example of how a bearish market looks like, right? Now also a ranging market, right? Remember I said earlier that we have three types of market conditions. We have a bullish market, we have a bearish market, and also we have a ranging market. Now in a ranging market, we can just see price moving sideways, no clear direction. Price is just moving sideways, no clear direction, right? Now this ranging market, most times when you can see this ranging market is scenarios whereby price wants to transition from a bullish market to a bearish market, or price wants to transition or change from a bearish market to a bullish market. Let me give a typical example of what I'm talking about here, right? Typical example of what I'm talking about here is that maybe price is coming from a bearish market, series of lower highs and lower lows we are created. Now price might decide to range a bit, take it out, come back, react, and give us what? Higher highs. Now this particular thing that happened here, what's it called? Range, because there was no clear direction here. Price didn't take out any low or any high simultaneously. We just have price reacting in a zigzag motion, no clear direction. Now the moment price breaks out this series of high that we are created here, more like a liquidity, what happened next? Price came back, tap a level here, maybe a key level or another block, an AVG, depending on the POI we are using. And the moment price comes back to react, we had all these buys. Now you can see that this was a bearish market, price range, and transitioned into what? A bullish market. So that's just an example of structure in brief, right? So you can do well to go back to my channel and watch the videos to educate yourself properly on structure, right? Now let's come for what we have for today. Our major topic for today is what? Range, right? Is range. Now what is a range? I've been talking about range. For those of you who are on my Telegram channel, who are in my Twitter, you always see me talking about range and stuff. Now what is a range? A range, in a simple form, a range is characterized by price creating what? Sweep of liquidity and break of structure, right? Sweep of liquidity and break of structure. Now in any market condition, the moment you see price giving to us what? Sweep of liquidity and break of structure, that is a range. Now a range is different from a ranging market. Please take note, a range is different from a ranging market. A range is characterized by what? Sweep of liquidity and break of structure, right? Sweep of liquidity of a high, sweep of liquidity of a high, and break of structure of a low, right? Now you can see from what we have here, price swept liquidity of this high and also broke structure of this low. Now we have what? We have a range. Now a range can also be called strong high or strong low, right? A range can also be called what? Strong high or strong low, right? Like I see this is a bearish range, and also this is a bullish range because we have what? Price swept liquidity of this low, right? And broke structure of this high, giving to us what? A strong low in this scenario, right? Price gave to us a strong low in this scenario. Now you can see that this is a bullish range. The one I'm drawing now is a bullish range, and this particular one what? Is a bearish range. Now where can we call the strong high? This particular high that was formed here is our strong high, which means we don't expect price to break this high, right? Now this is our strong low as well. We don't expect price to break this low. So this is a range, right? This is a range, and also this is a range, right? Now, how can we implement range into our trading, our system? How can we take profits off the markets by trading ranges? Now, this is where the eyes is coming to us, right? How can we incorporate ranges into our trading system, right? Now, before we can incorporate ranges into our trading system, we must understand what is called a defined range. We must understand what is called a defined range. Now, what is a defined range? A defined range is characterized by price, creating sweep of liquidity and break of structure on both ends, right? As you can see, price creating what? Sweep of liquidity, break of structure in a bearish market condition, and also sweep of liquidity and break of structure. Now, what do we have here? You see price swept liquidity off this high, break structure off this low, and also from the downside, we can see price swap liquidity off this high and break structure off this low. So this particular structure from this high we have here to this low we have here is what I call a defined range. A defined range, right? So from this high here to this low here is what I call a defined range, right? A defined range, in a simple understanding, is characterized by price creating strong high and strong low in the markets. Now let's come back to structure. Let's incorporate structure into range. Let's incorporate structure into our range, right? Now, remember I say something that a bullish market is characterized by continuous break of structure to the upside. Now, let's look this use this last leg of this break of structure we have here. Now, you can see that, for example, this particular break of structure happened on the daily time frame. Now, also, I want to see a range form before I react from this break of structure. Before I react or take profit off this break of structure that we have here. Now, most times, this particular swing high here to this swing low here, might look like this on the chart. Maybe price was coming like this. This was a swing high that was formed for the swing low. Now, price might decide to do something like this. That give to us what? Sweep of liquidity, break of structure. Now, go up to give us this break of structure we have here, right? This is the break of structure that we have here. Now, the moment price gives us that break of structure we have here, the moment price gives us that break of structure we have here, if price gives us something like the sweep of liquidity and break of structure, we now have what? A defined range of this break of structure we have here. You can see very clearly we have sweep of liquidity, break of structure. We also have what? Sweep of liquidity, break of structure. Now, what are we doing? Because this was a bullish market, we'll be looking to take buys off this market in the sense that we want to see price react a bit, then continue buying off this range, right? Now, most times what I do is that the moment I have this sweep and break, remember from the key level series, the last video I explained key level refinement. And whenever you have the sweep and break on the lower time frame, you come to a higher time frame to get your key level. Now, let's take for example, this particular move was happening on the daily time frame. This particular move happened on the daily time frame, and also we had our range on the daily time frame as well. Now, remember I said something that lower time frame range, higher time frame key level, lower time frame sweep and break, higher time frame key level. Now we had this sweep and break on lower time frame. The first thing I want to look out for is that I want to identify my liquidity in the market. Now let's take for example, this was the only visible liquidity we had in the market here. This was the only visible liquidity we have here. Now the next thing I want to see price tip out this liquidity first. Now below this my liquidity, I want to spot my key level from my higher time frame. Now this particular sweep and break happened. This particular defined range was present in the daily time frame. So I come to what? The weekly time frame to get my key level. Now my key level should or must be below this liquidity, right? Below this liquidity. Also on the weekly. Let's take for example, I now have a weekly open close key level here. Now this is where I will now apply what I did on the episode 3 of our key level series. Higher time frame key level. When I come to lower time frame, I want to refine it off it. And the rest you can see that you just see price come into that key level that you refine and tap and give us buys till all this high is taken out from the market. Now you can see that I know there are some questions that might be on your mind that okay, this is a strong high. We don't expect price to trade off it. Why is price going to take it out? Now this is where the explanation comes in play. This is a bullish market. Now, in a bullish market condition, every strong high attracts in the market. Every strong high that is formed in a bullish market condition attracts. Now, I can see that this was a bullish market. We are having series of buys to the upside, higher highs, higher lows, higher highs. Now, also, when we investigate this particular swing move we have here, we saw that, okay, we have a range here. This was a break of structure. So automatically, in as much as we have this major break of structure here, anything we are going to be focusing is what? Is just to buy. Now, all these sales are what? Are just retracements, just like how we have price printing what? Higher highs, higher lows. There must always be retracement for price to do. Now, this particular sales we have here, we are just retracements to tag our higher time frame key level and continue the bullish move. To tag our higher time frame key level where and continue the bullish move to the upside. So that's just basically how I interact with my range and also take profit off the market. Now, this is just like an introduction video on structure and ranges. This will be our episode 1, introduction to structure and ranges. So on other episodes, we'll be talking about how to incorporate ranges with break of structure, how to incorporate ranges with pullbacks, how to incorporate ranges also with confirmations, how you can take confirmations. Now, most of you can see that in this particular move here, most of us might be very, very scared to take all these buys. Now, how can I incorporate range with confirmations? So I'll be also talking about that in the videos that I'll be posting after this one. So this is the episode 1 of our ranges series. We'll be talking about introduction to structure and ranges. Now, let me just make a review, a recap of all what I've been saying so far in this video. Now, remember I say something that a bullish market is characterized by price creating series of highs and lows, series of highs in the market, right? A bullish market condition is a market that price keeps creating series of highs in the market, right? Now we can see from here, price keeps creating series of highs in the market. Now, for you to incorporate your range into your structure, you must first of all identify your higher time frame direction. Now, this might be happening on the weekly or on the daily time frame. Now, the moment you are able to spot out your range on the weekly, on the daily time frame, the next thing you want to spot out is what? Your range. So, once you're able to spot out your structure from higher time frame, the next thing you want to spot out after your structure is what? Your range, right? Now, most times I look for my range or what? 4 hours and daily time frame. That's the 2 time frame I use to find my range. Now, for those of us who have been attending our market recap every Saturday on my Telegram channel, we should be very, very familiar with ranges. We should be very, very familiar with ranges. Now, for those particular set of people that do attend my trade recap episode, you know that for a fact that I always identify my range from my daily or 4 hours time frame. Now, the only time I can play with my ranges from lower time frame is only for confirmations after getting my higher time frame range, reacting from my higher time frame key level. I can only play those lower time frame range once I get my direction with my confirmation, right? Now, structure is gotten from weekly, monthly, daily time frame, and also 4 hours time frame. Also, my range, I only get them from my daily time frame or my 4 hours time frame. Now, this was the last load that was created before this break of structure here. This previous price action. How do I trade off this particular swing move I had here? I want to first of all spot out my range. Now, this was the sweep of liquidity here and break of structure here, giving to me my strong high, and also I have my strong low as well. Now, this was my break of structure I had here from the daily time frame, monthly time frame, or even weekly time frame. Now, let's say for example, we had a daily break of structure here happening here on the daily time frame. Now, coming to identify my range, I was unable to identify this particular sweep and break, my defined range or my daily time frame. The next time frame I want to go to is my 4 hours. Now, the 4 hours is very clear. We have sweep of liquidity, we have break of structure given to us a strong low. Also, from this upside, what do we have? Sweep of liquidity and break of structure given to us what? A strong high. Now, the next thing we want to do, we want to react off this range based on structure. What is structure? Structure is bullish. Can we get sales? Yes, but every sell we are having from this range are what? Retracements to give us buys for the major move to take out this overall high. Why? Because we are bullish. So you can see that incorporating range with structure is always the icing that you need for your trading approach, right? Now, in further videos, I'll be giving us a proper understanding of all these ranges. I just want us to get familiar with range first of all before we can do anything. Now, with this particular video, I believe that we are able to identify ranges. We can also be able to identify strong highs and strong lows, and also we can be able to identify a defined range. Now, let's go to our chart and look for examples of where the stuffs they are in play, right? Now, let's come to GBP USD. GBP is one of my favorite pairs I trade. Now, if you see very clearly, what do we have here? Let me clear my chart and explain better. Now, let's come to daily time frame. On the daily time frame, on GBP USD, you can see what we have here on the daily time frame. If you investigate very clearly, for those of us who are familiar with this pair, we can be able to see that, okay, this pair have been bullish for some time, right? Now, you can see what we have here. On this particular move we had here, we have a break of structure off this high. Also, we had a break of structure of this high as well. Now, after identifying your break of structure, the next thing we want to do is that we want to identify our range. Now, if you look very clearly from this particular move we had here, okay, we can be able to see we had sweep of liquidity here, and also we had break of structure here. But as price giving to us a strong high, no, we only had strong lows in the market. Now, next thing we want to do, I want to come to our 4 hours time frame. To identify our range, we want to come to our 4 hours time frame. Now, let's ignore this move because this move is here to print for us a range. Now, let's look at the previous buys we had on GBP USD. Now, remember, this was the daily break of structure we had here. It's the daily break of structure also visible on the 4 hours as well, right? Now, the next thing we want to look out for is our range. Like you can see very clearly, what do we have here? We have sweep of this look here. Also, trying to make my illustrations as perfect as possible. Now, from here, what do we have here? We have sweep of this low, Mr. Port. Next, we have we have break of this high, giving to us what? Our strong low, which is this guy here. Our strong low here, right? Now, after having our strong low, do we have our strong high? Yes. Where is it? Let's investigate it very clearly. Now, you can see from here, what do we have here? Price swept this high. Okay, this was the move here. Price swept this high. Now, where's the low that created this high? Right here. Look at what price did. Price took out this low here, right? So this was our strong high here. Our strong high and also our strong low here. Now, the next thing we want to look out for is our higher time frame key level. Remember, I say something that whenever you have your lower time frame sweep and break, you come to a higher time frame to look for your key level, right? Now, this was happening on the day time frame, on the 4 hours time frame. I mean to say, if you come to daily, you want to get your key level. Like I see very clear that most times when I say something, I say that most times I always define my key levels of fresh key levels on the higher time frame, right? Like I see very clearly from here. What do we have here? We had this fresh open close key level that is yet to be mitigated. It was just disrespected without mitigation. Like I said, that's the exact level we see price coming into. Now, higher time frame key level, when we come to lower time frame, we want to define it. Now, coming back to 4 hours where we had our range, you can see very clearly. Most times I say that whenever I have my higher time frame key level, I push it down a bit to the next place. Now, where do I push it down to? This particular open close here, which is the next key level. Like I said, that's the exact level that price came, price stopped, and we had all this bias till when? Till this high was taken as our target, right? So you can see very clearly by just by understanding ranges, we are able to make profits off the market. Now, let's look at another example. USDJPY. USDJPY is a clear example on there on USDJPY. Now, USDJPY, what do we have on USDJPY? What do we have on USDJPY? You can see from USDJPY, what do we have here? We have sweep and break from higher time frame, which is very clear here. We have sweep of this low here. We also have what? Break of this high here in the market, right? Given to us what? Our strong low. Given to us our strong low in the market, right? Strong low was from there. Now, here's our strong high. If you investigate on your live chart, what do we have? We see price sweep this low here, this high here, I mean to say. And also price did what? Price broke this low, giving to us what? Our strong high. Now, we now have a strong high and a strong low. Where is our liquidity? You can see very clear all these lows, they are what? They are liquidity points in the market. Liquidity points in the market as well. Now, this is a 4 hours defined range. Here to get our key level, we come back to daily to get our key level. Now, the daily time frame, remember I said I always love to use fresh key levels of the daily time frame. Like I said that this particular open close that was suspected was the only fresh key level I had here. Now, coming back to 4 hours, I want to define it. Now, if you look at 4 hours, what do we have here? We have this key level below it here. Like, and that's the exact level that we had all these buys happening. Now, here's my target. I want to see this high taken in the market. Although the high was not taken, but you can see that by just my understanding ranges, we would have taken profit off this market. Now, most times I don't always use the weeks because there are some scenarios, there are some instances whereby price might not take that high and start reversing. Like I see very clearly, most times you can just start to come to your line chart. We use your line chart. This is the strong area of our line chart. Coming back to our candle chart, you can see that price have already taken out the target if we are using our line chart as our strong high, right? So that's just basically what I have on ranges. I will see you in the next video. I remain Emisky, and also for those of us who are joining, do well to hit the like button, hit the subscription button, and also comment your view on what you learned so far on the videos I've been dropping. Okay, so thank you very much for watching. See you in the next video.